Welcome to the inaugural edition of Fearful Investing. I'm your host, Dr. Bryson Okeoma. The information in this video is based on my many years of experience investing in the stock market. I am not licensed to provide financial or investment advice. However, my education in the geosciences and nursing equipped me with the skills that helped me achieve success in the stock market. I am here to encourage you to explore the potentials of the stock market as a tool for fighting poverty and reducing wealth disparities. If you are interested in any equity mentioned in this presentation, I encourage you to conduct your own research before putting your money in the equity. As a disclaimer, I do not have any relationship or business interest in any business or equity mentioned in this video other than buying and selling shares in the open market from time to time. Thanks for watching. Send me your comments, your likes, subscribe to this channel so that the next time we'll have a video out, you'll be the first to be notified. Follow me on YouTube, LinkedIn, Facebook, Instagram. With recent trends, particularly coming on stream of more stock trading platforms, stock market investing is increasingly popular, yet many more people are still left out. This presentation targets those that are still left out, those that don't know they can do it or don't know how to do it. So why invest in the stock market? Simply put, you can't afford to be left out. Also, that's where the action is. The richest people in the world are owners of businesses and equity holders. If you want to be rich, do what rich people do. If you can't create your own successful business, you can at least own equities in successful businesses. Why invest in the stock market? First and foremost, it's an instrument to build wealth and reduce wealth disparities. Most times, it's not about how long you work. It's about what kind of work you do and what you are paid for doing that work. A 2019 survey of consumer finances published in September 2020 showed that white families have 8 times the wealth of Black families. The survey also showed that white families have 5 times the wealth of Hispanic families. The graphics over here are a representation of the same information. See, this is white families' wealth, median net worth, 8 times more than those of Black families, and about 5 times those of Hispanic families, and probably 2.5 to 3 times those of other Americans not represented by these 3 categorizations. Down here is the same information represented by a slightly different metric. This is mean net worth. So 3 reasons to invest in the stock market. Reason number 1, you can't afford to miss out. Because most governments of the world distribute public funds through economic policies and network systems sufficiently captured by the stock market. Secondly, the fear of losing your investment when stock market crashes should not be the reason why you're not invested in the stock market, because no government would ever preside over stock market crash without aggressively taking steps to mitigate it. Berkshire Hathaway's Warren Buffett understands this so well, hence his admonition: be greedy when others are fearful. Warren Buffett and his group invested without fear during the 2009 financial crisis, when most people were afraid and running away. Of course, his investments were handsomely rewarded as the stock market recovered from the economic depression. Reason number 3, the stock market as a truly democratic institution. Now, this is probably the most interesting, particularly for minorities. When you place an order to purchase or sell an equity in the stock market, nobody knows your identity, and nobody can deny your order on the basis of your identity. Nobody will say, I will not sell to him or her because I don't know how he or she would handle the transaction. So you get what you deserve in the stock market. Much of the biases that underlie institutional racism is not evident in the buying or selling of stocks. In that sense, one would say the stock market is perhaps one truly democratic institution. You may be discriminated against at school or at your place of work, but the stock market is different. So if you have a chance to participate in the one truly democratic system in the world, why would you be on the sideline? So what are you waiting for? Participation in the stock market is in separate tiers. There is participation through your employer-sponsored retirement program, such as 401k, 403k, and others. For example, in the state of New York, we have 457, which provides opportunity to save more and invest in the stock market. There is also usually high net worth individuals whose investments are managed by asset or investment managers. In other words, asset managers and investment advisors are investing in the stock market on their behalf. Then there's the group we call self-directed investors, like myself, and those that are left out, probably because they don't know they can do it or don't know how to do it. So my goal is to encourage participation of people uninvested or underinvested in the stock market, with the recognition that people may be afraid of losing their investment. Hence the idea, fearful investing. To minimize risk of losing your money, investment advisors and analysts often recommend buying stable stocks with proven record of outperformance, and there are many of such stocks to choose from. In this presentation, I'll be discussing just two, and my first is BlackRock Science and Technology Trust. BST is a closed-end fund with the capacity to capture growth, as many of its top holdings are the high-flying stocks on Wall Street. So I wanted to share this screen with you guys. This is how BST appears on E-Trade platform. I wanted to show growth potentials of this stock. Like in the last year, in September last year, it was around $45. Over the year, it got up to $58 before it started trending down. I think this downward trend was after they issued additional shares, but it has stabilized around $54 as at close of trading on Friday, September 24th. It closed at $54.03. So if we look back over the last 5 years, about 5 years ago, it was trading around $18, and over the years, it's gotten up to $54. As I mentioned earlier, BST is a closed-ended fund with the capacity to capture growth, as many of its top holdings are the high-flying stocks on Wall Street. While you wait for this growth to occur, at a stock price of $54 per share, it pays you a monthly dividend of 5% as of September 24th, 2021. However, it has an expense ratio of 1%. Compare that with other funds with comparable holdings, such as QQQ and VOO. Here, it shows that you can buy a BST with $54 per share. For QQQ is $373 per share, and for VOO it's $409 per share. BST pays a dividend of 5%, QQQ pays a dividend of 0.49%, and VOO a dividend of 1.34%. The frequency for their dividend for BST is monthly, for QQQ is quarterly, and for VOO is quarterly. Expense ratio for BST is 1, for QQQ is 0.2%, and for VOO is 0.03%. This next chart shows the top holdings of the three funds. The first spot is Apple across board. The second spot is Microsoft across board. From the third row, it starts to be different. For BST is Kakao, for QQQ is Amazon, and for VOO is Amazon. And then from the third row, they start to have one or two different stocks here and there. But essentially, the three funds give you exposure to the high growth, stable, performing stocks on Wall Street. The second stock I want to talk about is Artisan Partners Asset Management Incorporated, with the symbol APAM. APAM is an asset management stock with the price $51 per share as at September 24th, 2021. Its assets under management have grown steadily in the last few quarters, from about $125 billion 2 quarters ago to over $170 billion at the end of second quarter of 2021, with corresponding increases in earnings. So it pays a dividend of 80% of its earnings, which in the most recent quarter was $1 per share, having reported earnings of $1.28 per share. So this is its earnings profile over the last few quarters. This is from Yahoo Finance. You can see how it's beating estimated earnings in the last 4 quarters. And you see, this is just beautiful the way it comes across. You can almost draw a straight line and project earnings with some degree of certainty. In the upcoming quarter, they are projecting $1.33, and given that it has beaten a projections in the last 4 quarters, actually more than last 4 quarters, but this graphic just shows the most 4 recent quarters. I'm expecting that it's going to be making over $1.33, which would mean a dividend of over $1 per share in the next quarter. Okay, I'm going to show you how APAM appears on the E-Trade platform. So this is APAM on the E-Trade platform. We're looking at the price range over the last year. In September, it traded from the low $40 with some volatility, of course, during the year, and it reached a peak value of $57.65 on May the 3rd, 2021. It has trended lower since then. It closed Friday, September 24th, 2021 at $51.01. If we look back 5 years back, in 2016, it was in the middle $20 range, say $26.50, and with some volatility, of course, over the course of the 5-year period, and with nadir or lowest value that occurred in March due to COVID. And since then, like every other stock, it has appreciated in value. And it, like I said earlier, it closed Friday at $51.01. So what are you waiting for? It's never too late to start investing, and now may actually be an opportune time to start. The US government is getting set to invest $1 trillion on infrastructure. Another $3.5 trillion budgetary allocation is in the works. Much of these funds will flow through the stock market. Those invested in the stock market would capture a disproportionate amount of these funds than the uninvested, thus exacerbating the wealth divide. As I said before, except if the world comes to an end, no government would oversee the collapse of the stock market without doing everything possible to restore it. During the 2008-2009 financial crisis, the Obama administration injected over $800 billion of stimulus money into the economy, and the stock market roared back and was in steady uptrend before COVID-19 struck in 2020. Then the Trump administration injected over $2 trillion of stimulus money to support the economy. Again, much of these funds passed through the stock market. BlackRock, the company the Fed recruited to manage Fed's stimulus bond buying program, reached over 80% in stock value. At the peak of it, it got up to $959 per share, but it has since lost some of that. On Friday, September 24, 2021, it actually closed under $900 per share. Again, this is BlackRock on the Yahoo platform. As I said, it closed under $900 on Friday, September 24. It actually closed at $874. The week before that, it was well over $900. But this past week, there were a lot of volatility related to the issues in China, and then the Fed's meeting that was concluded on Wednesday, September the 22nd. The Fed come up with what appeared to be accommodative monetary policy. Again, on Monday, September 20th, the stock market was grossly negative. The Dow lost about 600 points. But after the meeting on Wednesday, it gained over 300 points, and then it followed up with another 500 plus points again on Thursday. That helped it recover some of the losses. So it closed Friday at $876 per share. So looking back here, last year, when this announcement was made, the stock was going for $550. Then it gained up to $650, which is a gap of $100 when the Fed chose the company to manage its bond buying program. So over the next year, it's been incrementally going up to the point that it got up to $959 on August the 26th before it started trending down. So last Friday, September 24th, it closed at $874. As I said before, no government would oversee the collapse of the stock market without doing everything possible to mitigate it. Stock market investors benefit disproportionately from these government interventions more than non-investors, and this helps to exacerbate wealth disparities. For example, I don't know what the actual numbers are, but for illustration purposes, assuming 70% of white Americans and 30% of non-whites are invested in the stock market, then 70% of whites would benefit more from the $1 trillion of Fed's interventions compared to 30% of non-whites that are uninvested. Similarly, 30% of non-whites would benefit more compared to the 70% of non-whites who are not invested. Facilitating home ownership is one of government's main approaches to reducing wealth disparities and increasing generational wealth transfer. Government's interest in bridging wealth disparities is much welcome. However, this approach is painfully slow. It takes up to 15 to 30 years to pay off a mortgage. Investing in the stock market can offer a more robust and quicker path to wealth if done scrupulously. Having said that, fighting poverty requires throwing everything you have in it. Education, of course, home ownership is part of the equation. Investing in the stock market gives you another opportunity. And of course, hard work and perseverance. You need to have vision, you need to have the determination to fight poverty. In addition to the other forms of participation in the stock market, which we've already discussed, such as employer-sponsored retirement savings and asset or investment managers managing investment for high net worth individuals. The self-directed account is the focus of this presentation, and this just shows that there are many options out there to choose from. You can contact your bank and ask about opening a brokerage account. For me, I use E-Trade, I use Merrill Edge, I use Robinhood. These three I use for different investment purposes. So assuming you have $110 in your account somewhere, and also assuming you have decided to open an account, and once you have successfully opened an account and you want to invest, for example, $110, instead of leaving that money in your savings account where at most you get 3 to 4%. If you decide to use it to buy a share of BST, which goes for $54 per share, and a share of APAM, which goes for $51 per share, for BST, you'll be getting monthly dividend of 5%, which is better than interest rate of 3 to 4% in a savings account. And on top of that, you're also able to watch your share grow over time. Like I showed to you guys, 5 years ago, this stock was selling for $18. Now it's about $54. Similarly, for APAM, it pays a quarterly dividend, which is you get paid dividend every 3 months, and the dividend it pays out 80% of its earnings, which means it pays a variable dividend quarter after quarter. So in the last quarter, it was $1 per share. Like BST, you will capture growth here. APAM 5 years ago was selling for $26 plus. And it closed last trading day, September 24, at $51. So my next video will show you how to place a trade. That is assuming you haven't done it before and you want to see how to do it. Thanks for watching. Send me your comments, your likes. Subscribe to this channel so that the next time we have a new video out, you'll be the first to be notified. Follow me on YouTube, LinkedIn, Facebook, and Instagram. Thanks again for watching.